Ladies and gentlemen, today is July 20th, which means we're about a third of the way through the third quarter of 2018. Before we go any further, let's take a look at what happened during Q2. During the second quarter, external factors such as the rise of interest rates and continued uncertainty surrounding the newly effective tax reform, as well as general pushback on prices that are, well, really high, have continued to push the market down. Total sales fell to 2,629, or a 16.6% drop from the same quarter a year ago. This is the lowest level of sales we've had in the last 9 years. Big news. Lower sales meant a rise in inventory. That number hit 6,985 total properties available by the end of the quarter, or a 10.7% increase from the same period a year ago. Lower sales with rising inventory naturally means lower prices, and the median sales price in Manhattan fell to 1.1, a 7.5% decrease from the same period a year ago. Wow. Interestingly enough, co-ops have retained their value quite well. After the 2008 recession, there was much less foreclosures in this market than there were in the rest of the country. And a big reason for that is that the co-op standards are much more strict than the bank standards. All in all, it was the 8th consecutive quarter without an annual decline in the median sales price for co-ops. That median sales price is $810,000, which is actually 2% higher than it was the same quarter a year ago. Wow. Condos, on the other hand, have taken quite a beating. The median sales price for condominium ownership properties fell to $1.65 million, of course, down 12% from the same period a year ago. That prior number was 1.875. So what does this all mean for you? Well, there's plenty of opportunity in the market right now. If you're a first-time homebuyer, this is a great time to buy. In hindsight, 2010 or so was a great time to buy. Interest rates remain at historic lows and prices have come down significantly over the last 2 years. If you're an investor, this is a great time to buy. Only 9% of properties are trading above asking price versus about 30% or so a few years ago. That's a significant difference. The rise in inventory means we're going to find what you're looking for. If you are worried about a further slip in the market, my recommendation is to allocate a lump sum of money, let's say $5 million, and disperse it over the next, say, 6 to 18 months. You'll hedge against further slips in the market. Lastly, if you're looking to upsize, this is also a great time for you. If your current home was worth $1 million and you're looking to buy something for $2 million, and we say that the market has gone down 5%, then that means a $50,000 decrease on your current home, while the next home has decreased $100,000. In total, you'd be saving $50,000 right there. The example is a bit simple, but these numbers do work out when we start looking at real properties. That's all for today. Thanks so much for watching. If you'd like any more information, you know what to do. Otherwise, you have a great day.